Okay, so hello everyone. I guess let's get started. I'm Siddhant Singh and I'm from IIT BHU, currently doing my third year. And I've been into Web3 actively for the past 8 to 9 months. I was introduced long back. And we have started IIT.fun with a goal of making crypto more mainstream in IITs. And if you look at the larger picture, more mainstream in India because everyone else follows what IITians are doing. That's how the trend has been, especially in tech. And Ravi himself has been into this space for a very, very long time. And he just knows a lot about economics, philosophy, and particularly if I talk about myself, he introduced me to the economic aspect of crypto. And now I'm just super, super interested in that same aspect as well. So, Ravi, it's all over to you now. I'll add in my points whenever needed and whenever we can have a conversation.
Thanks, Ed. Thanks. And thank you guys for taking out the time to believe in something on a Sunday evening at 6 o'clock. So, just a quick background about me. So, like, my journey in crypto started in 2013, where my roommates were mining Bitcoin, finding GPUs, and all of that. So, after that, I have been following what is possible because of this technology. And I saw a lot of things which motivated me that these are the things which I should be working on because they fundamentally solve the problems which we see around uh, in current times. And yeah, so after that I moved to full time into Web3 since 2021. Have been building products for 2021 2022. After that I have been working with Symbiote, which is an investment fund, so I had the opportunity to get horizontally into the industry around every narrative which Web3 is doing. And also we get to see what are the real time benefits which Web3 is creating for the public, right? So I'll guide you. Like, for the structure of today's presentation, what I've created is the things which I saw which motivated me to get into Web3 and start working on these problems, right? Rather than having than making it an academic structure, I'm focused on more about getting you guys excited about uh, what Web3 can do to improve the world. So I have also created a very basic slides which I'll use to conduct this session. And cool, cool. So let's start. Is it okay?
Yeah, yeah, perfect.
Awesome. Also, it's very interactive session. So anywhere, if anyone wants to speak something, ask a question, share opinions, please feel free to do this. Like, it's very casual setup. Okay. Cool. So I'll start with why should we care? Because everyone wants to work on an idea which eventually produces some value, right? Because packages are not something which I think fundamentally drives everyone. So there are people who also want to create positive changes in the world. So to do that, you must observe the negative things around the world, right? So these are the negative things which we currently see, right? And of course, like, there could be more. Please feel free to add, right? So, if we go through what are the biggest problems in our times right now? So, inflation and currency devaluation is one of the biggest problems because every time, uh, like, you have, because why do you need to have an appraisal every year? And your appraisal mostly is less than inflation. So, people are losing a lot of value while the money in their bank goes up, but your buying power doesn't. And this is something which we have observed across generations. For example, like, millennials hold around 5 to 10% of the total assets in the world, while most of the assets are concentrated with boomers, right? So while most of the work is being done by millennials, being done by Gen Zs, but they are not getting any value out of it because they are not able to fight inflation, which is directly controlled by banks, which are controlled by boomers, and we are not getting our fair cut. How are they controlled? They are acting as a middleman. By middleman, I mean any kind of financial transaction you try to do, there are tolls to that. For example, small transactions have lesser tolls, big transactions have more tolls and are more inefficient. For example, if you want to, let's say, send money globally, so cross border transactions will charge you around 6%. If you want to, let's say, do an IPO, So to do an IPO, your the IPO manager will charge 2-3%, the bank will charge 2-3%, right? So overall, what's been observed is there are around 10% financial tools in the terms of transaction charges, in terms of providing trust to the transactions. So this is again something which is not facilitated by technology. Technology can do it much more faster, but this is being done by the gatekeepers, which introduces us to institutional corruption. For example, like if you see, there is a lot of bailouts which happens for big banks, where we can see in the 2008 financial crisis, right? AIG failed. There were repercussions which should have happened, never happened. AIG is still out there. Lehman Brothers, they went down, but their executives are working in different banks doing the same things. How are they working? We don't know anything about it. There are black box algos depending on which the transaction fees gets decided, people get censored. There's a lot of dark patterns in financial system, dark patterns in your e-commerce system. iPhone more price, battery low more price. So and we are not aware of any of these dark patterns. By like we cannot look into something to find these patterns. We have to always through our cognition recognize these and protect ourselves. So this is a this works against us. We have broken democratic systems. This is actually in current times we have been seeing this a lot, as we can see with the elections around US, the Brexit. So I don't think like right now any country has a very stable government. Every country is facing a democratic crisis right now. They are being powered by misinformation. So social media controls most of your attention, and it has become your primary source of truth. But there is no way to like establish correct news versus fake news. And apart from even social media, even traditional mainstream news is has become highly a state run institution rather than a public run institution, which prevents the public from actually getting to the core of an issue through information being shared on social media or traditional news media, right? Which is basically being caused due to censorship. So these are majorly, I think, the problems which we are seeing in our times and which we think about. So yeah, so I just wanted to confirm, like, do you think like these are the problems which you would not want to be there in the world, right? Does these problems sound exciting to you guys?
Yeah.
Someone say yes,
So
please.
yes. So if I talk about myself in particular, then misinformation for me is a very big problem because if we look historically, we look at our grandfathers and everyone in their generation, they used to believe in newspapers. Everything in a newspaper was right. And if someone told something on a radio, it was right. Then came our parents' generation. They were like, okay, we cannot rely on one newspaper or we cannot rely on one news channel. They used to consume news from several channels, but they still used to believe on it to some extent. But if we look at our generation, we are like, okay, mainstream media is not true. Anyone who is quite influential is probably hiding something from us. And the guys who are pretty small, like they are researching the facts and they're posting all their research openly. Probably these guys are correct. So we don't really trust people on the basis of the number of followers they have. Rather, we trust on the basis of what all they are putting out, right? So we can see that pattern that there is misinformation crisis, and we have started losing trust on a lot of sources of truth. As but we as a society cannot evolve without trusting uh, a source of truth. We need to have a trustworthy source of truth. That's what I feel, because otherwise we'll just be a society that starts ignoring stuff rather than kind of learning new things or being informed about things, right? So yeah.
True. I think yeah, like this is something which,
Mm,
like to an inquisitive mind, information
mm,
and its authenticity is very important for growth in the right direction.
mm,
Otherwise, people, like they get stuck into echo chambers, and then
mm.
we see the rise
Yeah.
of extremism around us, right? So if we
Mm,
see religious extremism, political extremism, all of that is happening majorly due to the information asymmetry. People don't really hate each other. They have been made to believe that someone is an enemy, while that might not be true or it might not be relevant for them. So moving on, before we proceed, I just want to establish a very simple definition of blockchain, so that because we will keep on referring to Web3 in every discussion. So simply put, it's a distributed ledger where it's like a shared Excel sheet where every assets are being accounted for, and every time the Excel sheet gets updated to account in the new transactions which happened. These updations are being done by miners, which run the blockchain, and these miners are paid in the native token, which is called the gas fee. And all of the decisions which are taken around the maintenance and upgradation of blockchains is run by a DAO, and DAO is a decentralized autonomous organization where the participants are the token holders of that blockchain itself. This is the most simplistic definition of what is a blockchain. Cool. Let's move ahead to the trust problem. So, as we're talking about information asymmetry, right? So, generally, what happens, like society is when people come together and they can trust each other. For example, like if you are buying, let's say, an apple from someone, you have to trust that that apple is coming from a good source, has been cleaned, and all of that, right? Similarly, if we do any transaction, if you sit in a bus, sorry, yeah, if you sit in a bus, you have to trust the driver will take you to the correct destination. If there's a property dispute, you have to trust someone that he will resolve that dispute in a manner which is acceptable to people. So traditionally those were the rulers, because we didn't have a lot of rule based governance. So we put the power in hands of people who were powerful and were also just, which we used to call kings. And that's how society ran for a long time. But after that we saw, uh, so there was also religious institutions which served as the moral authorities, and the rulers were the people who used to run the property authorities and enforce contracts. But we came down to a better system when printing press was invented. So, because printing press was invented, we could actually have these rules written down and circulated to a lot of people. So now everyone has a copy of what the actual rules are, and they can take decisions as per what rule is written in that document. So the base of democracy is printing press. The demand of democracy was always there, but why it was never implemented, and why, let's say, it came down to 14th century to actually have democracies and scale it, was the Gutenberg printing press, right? So similarly, like right now, we have a better way of disseminating information, which is the internet. So because now the information is being disseminated at much faster speed, and authenticity can be established at a much cheaper rate. For example, like earlier, what used to establish authenticity? It was the stamps, the seals. So we used to create banknotes where the paper is controlled and no one else can create those currency. So this was the system on which our current democracy, which is republic. So currently what we live in is a republic, which has been made with the idea of democracy. There is no true democracy which exists anywhere, but we have kept on constantly improving that. So now with the advent of internet, we are at the stage where we can define democracy in a much better way operationally than the republic, which is around DAOs and the future governance standards. So yeah, this is where our trust problem comes in. And historically, if we have to model trust problem, there's something called a Byzantine general problem, which is being used to show how trust actually is important asset. What happens in a Byzantine general problem is there's a general and wants to attack a fort, but he has like 5 battalions which needs to be positioned around the fort, and they need to attack at the same time to win. If they don't attack at the same time, they will not win. So how do we make sure that they attack at the same time? Maybe one of the generals have been corrupted. So out of 5, how am I sure that this will happen? That, to be sure, there is a necessity to establish a consensus. So a trust problem is always solved through a consensus, and this is possible now in internet due to cryptography. We have developed consensus protocols where the consensus can be established as long as there is an internet, right? So this is generally how the trust problem is modeled. But how we used to do it earlier before internet is we used to have middlemen. These middlemen have access to all the information, and they are able to take decision basis the rules. But this is still not something which is transparent. So these middlemen are who? These are the institutions such as banks, the financial institutions. These are courts, the executive institutions as well. So because the contracts are there, but someone has to enforce it and has to follow the rules while enforcing the contract. And this is a thing which has both, like there's a cost to decimate the information, and there's also a time cost to it. The longer you take to enforce the contract, the more economic value is eroded. So as you can see in courts, right, you file a case, it will take 1 year for the judgment, and by then it's too late. While all the information is there, all the rules are there, but we are depending on a judge who has to allocate a time, who has to read all of this and then take a decision. I don't think that's an efficient system, because if the rules are out there and the decision can be taken by just reading the rules and accessing the information, anyone can do that. But if that information, if the decision is coming out from an information which is not publicly available, then that decision is not verifiable. But if the information is publicly available, then it's verifiable. So in those cases, at least, we don't need to have a middleman, as long as we have a consensus mechanism working for us. How are these enforced? These are basically smart contracts. Smart contracts are if this then that. So I feed a real time data on one end of smart contract, and then the decision output is coming out from the other end of smart contract. For example, if the temperature goes beyond 40 degrees centigrade, let's allocate more resource to manage water scarcity, right? So these are the things which smart contracts can solve. But again, like, they cannot make humans work, but they can definitely release the funds in the hands of humans while they are reading the weather data, right? So this is a much more efficient system than your current municipal body, right? Which has to convene for a meeting, everyone has to physically travel, and then they give the judgment. So this is where the efficiency has now achieved to establish trust much faster and much cheaper than the conventional middleman format, which we are currently working on. Cool. Any questions so far? Any interesting angle which anyone wants to point out?
Anyone?
Mm, all good. All good so far. Cool. Cool. Okay. I think
Yes.
the main fun will start when we talk about the current solutions. So yeah, this is generally so the Byzantine problem, and we reach consensus when so we cannot reach consensus when communication channels cannot be trusted. But if we have information symmetry, then we can obviously reach consensus much faster. And so, for example, like, where the places, like in a bank, we don't know if the bank is manipulating the records or not. We don't have any proof. We have to trust the bank
Yeah.
blindly. We don't have the so example for example, there's a bank, right? So the bank is managing $100 billion. We are not always sure on how solvent the bank is, what are the debt liabilities. Huh. Of course, they publish it every quarter, but it happens every quarter. It's not updated real time. If your
Hmm.
money transfers are happening, you don't know who is having access to your transactions. Similarly, um, while people have access to the transaction, they also try to extract from these transactions. I'll give you a very simple example. There are um, entities. So, for example, like, I was involved in a deal where the funds had to be transferred with a Mauritius entity, which charged around 2%, took 10 days to give us just the passbook, right? And
Okay.
10% was around like 10-12 lakhs they charged just to give us a passbook for 6 years of data of our own company. Right? So if you if you look at this doesn't make sense. Like, it should not cost 12 lakhs to update the passbook. If there's a system where
Hmm.
you have an Excel sheet where you have all the data, just click print and give it to me. But they are doing those things because there's no alternative. But yeah, now there is. Crypto does things much faster. So most of these transactions which I do on crypto, they take like 1 2 rupees, happen in 5 seconds. And this is why we generally prefer crypto for transactions now, especially cross border. Okay, so coming to the most important discussion. So this discussion is around money and inflation. So
Yeah.
there are two types of money: fiat money and crypto money. So fiat money is basically a promise. Fiat is basically a promise that I'll do this later, right? If you look at your currency notes, there's a sentence written over there: मैं धारक को 100 रुपए अदा करने का वचन देता हूँ. I promise to deliver 100 rupees worth of good services to the person holding this currency. So this is fiat is just based on a promise, and the currency is getting value because of what it is backed by. It has a very interesting history. So earlier the currencies were directly metal. So a gold is backed by gold, right? So there's no rocket science there. But eventually we moved to coins like copper coins. So the copper coins were backed by the guarantee of the ruler that okay, I will be able to deliver this much value. Then we moved to the democratic systems, and around 1910 the banks realized that if I have like 100 gold coins in my treasury, not everyone would want to withdraw it at once. So what I can do is, with those 100 coins I can have a balance sheet of 1000 coins with only 10% which is liquid with me, because not everyone will be withdrawing it at the same time. But it creates a risk that the bank is now having is giving promises out for 1000 gold coins while the bank is holding only 100. As long as the economic machine keeps on working, people are good. But when people start withdrawing, the people who withdraw first, they will get back their money, and the people who are left out, they will not be able to get back their money. And this is how the banks fail, which we have seen earlier happening in 2008. We have seen it happening in 1940, and there was a lot of bank failures in Germany as well in 1970s. So this is not something which is completely theoretical. We have seen banks fail in our lifetime, and the bank, whatever money you have in bank, is protected only by a clause. Like in US it is FDIC, so in India you have 5 lakh which is guaranteed, and rest is not guaranteed. So in the case of a bank going down, you will only be guaranteed to 5 lakh of your money in the bank, and rest you are not guaranteed to. So why is that happening? Is because the money is now not backed by something called gold, which is a physical entity. Now the money is backed by treasury bills. This happened around 1970s. Uh, so this creates a scenario where, so the country is saying that I have the authority to introduce these much assets, and if people want to withdraw that asset, which is beyond my treasury, then what I can do is I can always get those assets by invading other countries, right? Because it's an open economy, so I can introduce taxes on other countries, I can introduce tariffs on other countries, or I could directly go out on a full-fledged war. So this design of money has produced a lot of violence in the world, because when the money is backed by treasury bills, which is essentially the trust which people have in the country, which is essentially the might of the country, which is proven by violence. So in the current structure, we have money which is fundamentally backed by violence and not by any asset holding. And we can see this around us, because if you can see like what happened after 1970s is, we have been constantly increasing in the number of wars which we are having in the world, right? Every time the balance sheet of US starts going down, there's a new war. So
And there's a new tariff as well.
there's a new tariff. Yeah. So earlier, so during the 2000s to 2015, they were invading. So Iraq was the sixth largest economy. They invaded, took a lot of gold supply. Similarly, they invaded every other country which was rich in oil or any other natural resources, uh, chocolate supplies, bananas. So we have n number of reasons because of which countries have gone to war. 1940s, banana rights. Then we had palm oils. Then we had gold itself, and we had like oil as the petroleum, right? So these wars are being fundamentally caused by the nature of money. If we can fix this, that becomes a much then the world becomes a much less violent place, right? So again, coming back to why was it even fundamentally backed by gold earlier. So the property of gold is that gold is not consumable, unlike a lot of metals. For example, like steel has use cases in construction, copper has use cases in electronics, gold has very limited use cases. Yeah, electronics, there's very small part of gold elements which is there, but other than that, jewelry again not consumable. It's something which you wear and then you just keep, right? You don't eat it or you don't put it to economic value. The second feature of gold, which was very important, that was its stock to flow. So stock to flow basically means uh, how much time will it take at the current rate of production to double the total good in existence right now. For example, gold has a stock to flow of 52. What does that mean? Let's say we have 100 tons of gold right now, and we are mining gold at a rate of 2 tons every year. So it will take around 50 years to produce 100-ton more. So this creates a predictability in the supply increase which happens, which is not there in the fiat money, because the government can print any amount of money at any amount of time, but you cannot immediately increase the production of gold, because you have to put in a lot of energy, you have to put in a lot of manpower, and that is what which protects gold from inflating beyond comprehension, right? So this is something which gold has and was a very desirable feature. So this was replicated by Bitcoin. So Bitcoin also created a stock to flow, which right now is better than gold. So right now it takes around 63 years for Bitcoin production to actually double the Bitcoin in circulation, but the halving happens every 4 years. So we have created a stock to flow model which mirrors gold but is even more scarce, right? And that is how Bitcoin replaces gold in terms of digital asset, and Bitcoin can become that fundamental backing of money. So Bitcoin is a different cryptocurrency as compared to everything else, right? Because Bitcoin has a proof of work mechanism. What proof of work basically means is like you have to do all the calculations. Every miner will need to do all the calculations, and whoever wins will be mining the next block, as compared to proof of stake, where we first select the miner who will be doing the calculation and they will be updating the block, right? So proof of work involves a lot of energy, and so Bitcoin is basically backed by energy and compute. These are the two units which back Bitcoin directly. And if we consider Bitcoin as the new money, it also does solves one thing very effectively, which is the Cantillon effect. So what Cantillon effect says is those who receive the new money first can spend it before the price rises. For example, like if the RBI mints new supply, right? So who gets the access? Who gets the first access to those supply? People who generally trade in treasury bills, which are banks, financial institutions, wealthy borrowers. So they are able to access that money first. They are able to use that money first. While the retail, to hit the retail, it takes around 6 to 8 months. So Cantillon effect produces a lot of inequality in the society. Basically, the institutions act for certain classes faster and for certain classes slower. For example, if a rickshawala goes to file an FIR, or let's say a IS goes to file an FIR, it will always be done faster for the IS as compared to a rickshawala. So while fundamentally we say that we exist in a society which is equal, we don't, because Cantillon effect is always there. But if we democratize, whoever gets access to new money first, anyone can plug in as a miner and can access that new money first, then we are solving this problem of inequality as well. Does that make
Yeah,
sense?
yeah. This kind of makes sense now. How this problem is being solved.
Yeah. And I think let's also cover the origin of money. So it has a very interesting origin, especially the fiat money. So we might have read about the Crusades, the Great Crusades, the Christian Templar Knights attacking Middle East somewhere around 11th to 12th century. So the problem statement for Templar Knights was they need to go to Middle East, somewhere around Jerusalem, and they wanted to expand. But to do that, because you need a lot of resources, you need to keep paying your soldier salary, you need to keep on buying new food, right? So you will need money, but it's not feasible to transport so much gold from Europe to let's say Jerusalem, it will take a lot of energy. It will have a lot of risks. You might be raided by the kingdoms which are on the way, right? So the Templar Knights had a very interesting problem. And then there were some people, a group of people in Europe, which proposed the Templar Knights that do one thing: you deposit gold here with us, and our relatives who are in Jerusalem will give you back this gold in Jerusalem, because they also have that amount of gold. So what I'll do is I will write down a note for you that I owe you this much gold. Okay. And when you give this note to my relative in Jerusalem, they will give you back the amount of gold which you have deposited with us. So the gold fundamentally doesn't travel, but the trust that there has been a gold deposit made and there has to be a gold withdrawal made was carried on a piece of paper. That paper is called IOU, which is basically the origin of all money, fiat money, which we see around. And very interesting, those group of people were Jewish, and they are now the people who run all the banks. And it's natural, right? Someone who has invented something will always have a monopoly on something. Very smart people. But this essentially created a model which everyone found interesting, and now every country, every institution is using the fiat model, right? So, and now imagine if you were a banker, right? So you have like 100 tons of gold in your deposits. You would all so first you would issue IOU only for 100 ton, because you would think that, okay, how much gold I have, I will issue only for that. But then you will see that all your gold is not being withdrawn at the same time. So you will always feel like, let me create a model where I can issue IOUs for 200 tons of gold, because every time people are withdrawing from us, there's also someone else who is depositing. And this is how something called statutory liquidity ratio came into place, which is around 20% right now. So every bank is required to only have around 20% of the total assets they own liquid, and rest 80% can be in other forms, right? So this is the liquidity ratio which came from there, and this is why, because not all of our banks are whole, and this is why banks are failing. Cool. Uh,
Yeah.
I think I'm going very fast, but again, like, these are the
Yes.
ideas which I want to share with you. You will need to do your own research into these ideas, but these are very interesting stories which has shaped our civilization right now. Some things happened 1,000 years ago, some things happened 100 years ago, but that's how we have evolved as a society. Okay, coming down to a very interesting question: who owns the internet? Uh, so if you fundamentally see, there's no origin of internet, right?
Yeah.
Internet is not like, let's say, uranium, where we mine it from somewhere and then we distribute it to people. Internet is just people talking to each other. There is no central production, a central source of internet, but we still see a centralized control,
Yeah.
which is very interesting. So, like, your data is stored with the platforms. These are not interoperable. Your Instagram likes are not carried to Twitter. Your reputation is not easily transferable. All of that is happening, which represents the centralized nature of the internet we live in right now. Uh, so everything flows through a DNS. There's a lot of censorship. So these are the gatekeepers which are now controlling the institutions. Controlling the internet. While it was a very important thing back then, because gatekeepers are the enforcers of contracts, and contracts are the fundamental of economy, because an economy cannot actually function without contracts. But these gatekeepers, who are enforcers of contracts, can now be replaced by decentralized systems, because smart contracts automatically execute themselves, right? So while fundamentally no one owns the internet, we have a centralized control, which is causing problems like minimal transparency, black box algorithms, conflict of interest. For example, Instagram earns when you don't utilize your time, right? The more time you waste, the better it is for Instagram. So these conflict of interest arise because of this. We also keep on hearing about something called a moat, right? So a moat is
Yeah.
essentially a fence which we create around a garden so that the cattle doesn't leave. So it's like a jail. And all the internet companies, they follow a moat model. They make the cost of leaving their system very high. They don't give you any data which they have. They don't let the reputation be transferred to other systems. There's not enough interoperability as such. But in Web3, what is happening is anyone can transfer blockchains anytime, can transfer from one app to any other app anytime, and all their data are in an open ledger, which is either encrypted or not encrypted depending on the nature of data. But there is no gate to stop you. So the only way where the Web3 institutions can keep the user in is by constantly giving them the best value. So think of it like
Hmm.
five gardens, and every garden owner wants people to spend more time in their garden, but they cannot build a wall around that garden. So the only thing they can do
Huh.
is they can have more entertainment things which are within that garden. And when the
Hmm.
entertainment stops, then people move to the other garden. So there is a constant pressure with which people work to make things better. For example, if you'll see like traditional systems, once they have their mode established, they stop caring about users because they are 100% sure that the user cannot leave. Now they will, what they'll do is they'll do max extract. And I'm not saying in a way where I'm blaming them. This was the only thing which made sense at that time, right?
Hmm. Yeah.
But now that we have
Uh,
better technology, we can.
But this makes me question this whole concept a little bit. The question is simple, like if we look historically, wherever we required the coordination of multiple humans, over there, everything has been cyclic. It 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 has been cyclic even for empires. Uh, there comes a phase where everyone wants to be free, wants democracy, wants more power, and then they come to a phase after a lot of years that they again want one guy to control everything. They want economic growth. They want dictatorship. So that cyclic nature is is probably present in every state. So if we look at internet is somehow evolving like towards a state itself. It has its own currency. It has our digital selves interacting with each other. So we are a state, and now at present we are at that phase that we want democracy. We want more power for ourselves. But are we going to again go back to centralized model a few years down the line? Because and it's going to happen faster on the internet because things just evolve faster over here. So
Absolutely.
this question just came in my head today, so I was
This is
just thinking
actually a
about it.
very interesting question. Like, there's of course there's a cyclicity to things. So generally, how things work is they first get created in centralized systems, and then they decentralize themselves, and then there's a new technology which comes in, which needs to so you'll need to factor in that technology, and the people then again work on that technology. So that's when centralization happens. So think of it like something like a divergence which happens towards
Huh,
decentralized system, then a convergence which happens towards centralized system, and then again a divergence which happens. So right now,
huh,
in the last 40 years, we were in the convergence era. So things were
huh,
getting more and more and more decentralized, sorry, centralized.
huh,
And
huh,
now what Web3 is attempting is a divergence thing. So while the
huh,
divergence is quite visible right now, in terms of like we have like 20,000 blockchains, we have like n number of solutions for everything. But eventually, what will happen is, and again, like this is just my opinion, that there will be two, three very big players which will emerge from Web3 itself, and they will have monopoly over everything. So that's when things might become a lot centralized again, in principles, while the technology is still decentralized. But again, like at that time, there will be, let's say, new breakthrough which happens, such as quantum, right? Quantum computing
quantum
will
computing,
come,
right?
right? So then that breakthrough will again drive the decentralized nature of things.
Hmm, okay.
So there is a, to summarize it, there is not a single technology which can fix everything. It's a
Hmm,
constant velocity game which we are playing. So what we are
yeah.
trying to do is we are just trying to eh, create systems for our generations which will work good, and the next generation can create their own systems.
It,
And
it's
you know,
it's like how I look at whole of crypto community in general is it's a community that's working at the peak of tech, at the edge of technology. Like every new technology, we are trying to build systems around it. So if we look at ourselves like that, and rather than just key, crypto means only decentralization. No, crypto means working with AI, creating decentralized systems for AI as well, and probably for quantum computing as well in future.
Exactly. In fact, with
Hmm.
AI, crypto has become more necessary. Like there's a lot of attribution problem which AI has. Like because, for
Hmm.
example, if you generate an image, to generate that image, the LLM was trained on, let's say, 10,000 images, and it was directly influenced by 100 images. So who owns the right to the new image which is created? In the current universe, the LLM creator would want to have all the rights, but it's not fair because the LLM creator only created the model. The image could not have been produced without those 10,000 images on which the image was trained, could not have been produced by without those 100 similar images from where the elements were taken in the new image. And we want that attribution to also work, so that the people, so if I'm selling the generated image for $10, I would need to divide that into 10,000 pieces and send it to every person who had helped train the model, right? So this is something which we will demand, and when we start demanding it, we will also need to think about the technology which can facilitate it, because when we divide $10 into 10,000 pieces, it becomes very small. So these microtransactions are not something which current financial rails support. For example, like, can you send 0.003 rupees on phone pay? You cannot, right?
Yeah.
Those are
Hmm.
not built for that. In crypto, we have taken care of those things. So most of the crypto transactions have decimals to 8 to 12 digits, 8 to 16 digits.
Hmm.
And so this is why microtransactions can happen on crypto rails much faster and with better transparency than traditional payment rails, and this is what will enable that kind of attribution and value accrual to happen to the users, because if we don't have a technology to actually facilitate that, our demands mean nothing. So everyone keeps on wanting
Hmm.
democracy, but it took the printing press to actually make something called a republic, right?
Hmm.
So because everyone, like even in the 4th century, people would be like, we want our voices heard, but how? Unless you have that
Yes.
printing technology there, you cannot facilitate that.
Ah.
So now there
Hmm.
are a group of people who are, especially young people, they have found that the technology which is out there, especially the new technology which has come out, is able to facilitate these demands. So
Hmm.
these are the people who are working on the cutting edge of technology, and they are utilizing every technology out there. So it's not majorly about the technology, it's majorly about the necessity. So
Hmm.
AI, crypto, quantum, whatever is out there, we will utilize everything to make sure that the economic system which we are creating is just and fair.
Hmm.
So I'll just give you a quick example in terms of what Helium network is doing or what Peak network is doing. So internet is essentially a P2P thing, right? So if I talk to Siddharth talk to Teeth, similarly, every person talks to each other. But it is right now being served in a way where your network provider is having their own towers, which is then taking it to all of the homes. So it is happening through a top to bottom approach rather than a directly P2P approach. What Helium network is doing is like they are telling everyone to establish their own, just connect your own router, and every router talks to each other. And then we have a global network of router, so every person can access the global internet. So it's like a parallel internet, right?
Yeah.
We don't need
Hmm.
Airtel to actually come in for me to be able to speak to Sid. I can always
Hmm.
hop on from one router to other router and establish a direct connection with Sid. So this is
Yeah.
what basically Helium Network created. It took them a long time. Started somewhere around
Hmm.
2017, and now they have like, I can see, like 9 million community-owned hotspots. So each hotspots talk to each other. And there's a very interesting thing which these guys did last year. They plugged in the internet connection to some of the hotspots. So the satellite internet. So now Airtel becomes a node. So that's how you get
Hmm.
the access to Airtel also. AT&T becomes a node. So utilizing this, they are able to launch a telecom plan for $5 unlimited plan, while your traditional AT&T provides for $32. right? So this is much cheaper than how the traditional companies are able to provide that, because traditional company has a lot of infra to deploy to actually do this. They will have to build very big telecom towers. It takes around 2 3 crore to build one telecom tower, and then they will have to connect those telecom towers through optic fiber lines and everything. But if people are able to deploy their own capital and then charge for every packet of data which flows through their router, it becomes a much more efficient system. And Helium has exploded right now. Like, it's, you guys should definitely check out Helium. It's creating an own internet of sorts, replacing the traditional telecom company or wired service wireless service providers in general. Similarly, we can see with Peak. So Peak is a deep in network. So for example, like, let's say someone has a Hyundai car, which is a smart car. Someone has a Tesla, which is a smart car. But if I want to, let's say, build something, a feature on top of Tesla, I am not able to do that because I don't have access to that data. Tesla has access to that data and it's not able to provide us. So what if we actually collate all of this data into a database, and we allow Tesla to access this data while anyone else can also access this data. So this allows a lot of innovation to happen on top of the data. For example, if you'll see in the traditional automobile industry, anyone can manufacture your car seat. You have a lot of variation in terms of car seat. You have a lot of variation which you can do in terms of your interior. You can always fit in a turbocharger, right, in your car. But when these things are digital, then the gatekeeper's permission becomes very important. So how can we eliminate this gatekeeper is the problem which Peak Network is solving. So what they're doing is all of your data gets recorded on the blockchain. Your network provider, your vehicle provider gets access to the data as well, so they can create certain flows. While open source developers also get data, so they can create their own apps. Whichever app is better, you can use that. So if someone can build a better self-driving model than Tesla, then how do Tesla owners use that model instead of Tesla's model, right? Not possible right now. But with something like Peak, where all of your data first gets registered into a decentralized network and then flows to the people who are building on top of the data, it opens up a lot of avenue in terms of modification which is available, in terms of you not having that squeezability. If Tesla decides to bring your vehicle back to service center, you are sitting in the vehicle and it's traveling back to the service center, you don't have any say on that. So we need all of those switches to not be there for us to completely trust these systems, especially these IoT systems which are being created right now, right? So this was in the context of internet, why we need
Yeah.
actual accountability and actual control in internet.
Hmm.
um,
And
yeah.
like coming to Helium Network, we could have a very simple project over here as well. Like what I did once was you could just use your computer's IP address, write a simple socket program, and then you could chat with anyone on the internet who has the same program running on their computer without even having a mediator in between. It's just so cool. You can use your terminal to just chat with people. You don't really need a WhatsApp or a Twitter to actually communicate with someone else on the internet.
Exactly. Like, you don't need WhatsApp to actually talk to people, right?
Hmm.
You can
Yeah.
create a P2P encrypted network which people can
Hmm.
directly use. So in fact, there are projects. Oh, we are on Huddle, right? So Huddle is an
Yes.
example.
Huh.
Huddle is doing that.
So the only thing that my project lacked was it wasn't encrypted. I could see the messages, but yeah, that was a whole story. So yeah.
So so one part was the encryption part, and the other part was because you have been deploying the resources. So there is a token model which is necessary so that you can power this network to grow. So
Hmm.
every time you consume the network, you pay in tokens, and people who are producing this network, they get those tokens as compensation for powering this network, right? Then it becomes a closed
Hmm.
economy. So generally, how these economies work is there's a group of people who are around a certain problem. There are people who are facing this problem, and then there are people who are solving this problem. We connect both of them, okay? And the people who are solving this problem get paid by the people who are facing this problem. So if
Hmm.
you utilize, let's say, uh, a general purpose currency such as dollar or INR, then you are also susceptible to, like the currency demand and supply which is happening due to other problems as well. But when you
Hmm.
introduce your own token, then you have depegged yourself from, let's say, uh, the service becoming expensive because the demand of apples have gone up, right? The demand
Hmm.
of
Yeah.
mangoes have gone up, rupee becomes scarce. So you have depegged your economy from other economies by introducing a token in itself. And this is a complete
Hmm.
model of a Web3 economy. It starts with a
Yeah.
community, then you map the supply and demand, then you facilitate those transactions, and then you put in a token for those transactions,
Hmm.
and that's it.
So, in Web3, basically, tech roadmap ki jagah, you have parallelly an economic roadmap as well. And these are the
Exactly.
steps in it. Yeah.
Exactly. So
Nice.
what we call it is, we call it progressive decentralization. So
Huh.
first create a community, then identify the suppliers and the demand, then make a way where these transactions can happen. Make a way basically, so whatever is being sold, there are three things which happen in any transaction. There is a flow of information, there is a flow of the currency, and then there is the flow of actual goods. So when the actual goods are digital, they can move on digital rails. The information, that can also happen digitally. But when the currency is not digital, then it's not
Yeah.
something which is a completely digital economy, right? So when
Hmm.
we introduce a digital currency in that, then we have a complete market which operates digitally and doesn't need any middleman to like to regulate the market. And this is something
Hmm.
which excites me a lot
Yeah.
personally.
Hmm. Yes. It probably excites everyone else as well because if you look at Balaji Nawal, they keep talking about this. You look at any other leader as well, Vitalik keeps talking about this. And I guess digital currency is not a new concept as well. But before Bitcoin, there were many attempts for a digital currency, but no one could solve the Byzantine general problem. Bitcoin did solve that. So I guess digital currency was a need from a very long time. Peter Thiel has been a very big believer of digital currency from like I guess early 2000s itself. So it's not new. It it
Absolutely,
it was
absolutely.
needed. Yeah.
I think digital currencies. So there people have been talking about digital currencies since 1970s,
Huh.
1970s to 1980s. So there was a group of people called cyberpunks. So they have that
Hmm.
entire vision which they laid out. Then we had a lot of cryptographic innovations which came in again, like cryptographic innovations when they started. Governments started banning use of cryptography. Then
Huh.
the utility of cryptography was proved in encrypted communication. So that's where government started accepting cryptographic things, and people started reading more about it. And then someone, Satoshi, which we call him,
Hmm.
used that to create a mechanism where, using cryptography, they can have a consensus mechanism which produces
Yes.
something called a scarce good called Bitcoin. So again,
Hmm.
like it has a very good history. In fact, consensus mechanism is
Yeah.
also not something very new, like Google spam,
Hmm.
email spam
Hmm.
identifier, that also has a consensus mechanism. It was just
Consensus
that Google didn't
mechanism. Yeah.
decide to make a currency. They utilized that to filter
Hmm.
out the spam mails.
Yes.
But yeah, like it was just coming together of a lot of things, to be honest. So certain
Hmm.
amount which went to so certain weightage can be given to the technological progress in terms of having new consensus mechanism, advanced cryptographic available. Certain weightage can be given to the uh, access to internet. So in 2000, around 2008, like a lot more people had access to the internet, so the network could eventually had have a critical mass to start, right? And that was the only thing because of which Bitcoin succeeded while others failed. It was just around the timing, and the timing was immaculate
Hmm.
because 2008 crisis actually. Oh shit.
Uh,
No problem, no problem. I
huh.
can,
Yes.
yeah. Uh, so yeah, I will also share the slides here itself.
Hmm.
So yeah, my laptop shut down.
The notification came like
Yeah.
a few months back.
Actually, I'll just shift inside. So okay,
Yeah.
you can keep talking. So Bitcoin was just a culmination of right things at the right time.
due to the economic crisis
Hmm.
which happened, we had a clear idea on why we need something called a decentralized currency, and that's why Bitcoin
Hmm.
actually succeeded while others failed. So yeah, give me just 2 minutes. I am switching on my laptop again.
Yeah.
But yeah, I'll take a small break here just to see what
Hmm.
are people's thought around this. Like, are you getting a sense of what Web3 is? Do you think like this is something which solves for relevant problems out there? Anyone?
Hmm. Anyone? Yeah.
Mm-mm.
Yeah, I think crypto in generally it's going to solve a lot of problems. Like RG, I was scrolling through Twitter and I came across this tweet where someone had generated an AI image of a receipt. Okay, and the people were discussing very naively that, oh, this is such a bad thing. If people are able to generate receipts through AI, and it was very realistic, then people will try to misuse it. Most of the companies give allowances based on the bills that you show them, right? So they were very worried about the fact that people are going to misuse it, but they don't really understand that this problem has already been solved by crypto and consensus. Like whenever a transaction is being made, just put the transaction ID, put the amount spent on a ledger, and then companies can totally verify that whether the transaction was legit or not, whether the reimbursement should be made or not. But this this tweet went viral. I think there were more than 2,000, 3,000 comments, and everyone was discussing the same problem without realizing that the solution to this problem already exists. And it's not just one part. I think people have started to adapt it as well. Recently, I was reading about CBSE. They have they have integrated this blockchain technology to verify 10th and 12th grade mark sheets. So I think crypto is solving real problems, and slowly even people are realizing, but there is still a long way to go. I mean, it's very difficult to make people realize that what they have is extremely powerful and it's going to change a lot of things.
There is this village in India that has put all its land records their on a blockchain, so there are no more land disputes in that village. So you're on mute, Ravi. Yeah.
If someone wants to read on that, that village is Gadchiroli. It's in Maharashtra.
Hmm.
If I'm not wrong, yeah, it's Gadchiroli in
Yes.
Maharashtra. It was an IS officer. One of the I think he was also an IITian, Shubham Gupta, if I'm
Yeah.
not wrong.
Hmm.
So it took someone in administration who actually understood tech to start implementing these. And as Steve also said,
Yeah.
like very interesting angle. I think I also saw the same thing floating around on Twitter. So with now that AI is coming, right? So there is no way to actually verify if the image is right, if the image is wrong, when was it actually captured. So if the source is on blockchain, you have an immutable record, right? There's a verifiability element which is there, and the problem which we are solving for is verifiability. And the scale of this problem is going to be humongous in the next 1 2 years. With the rate with which AI is progressing, verifiability as a product feature for blockchain becomes much more adoptable. So generally what happens in the industry is like we are working on the problems which are in future. So while when we are building, a lot of people might be laughing at us that what we are doing is not needed at all. But in 1 or 2 years, they will realize that okay, we actually need verifiability, and then the demand side of things will start. So a lot
Hmm.
of the demand side of things will for crypto will start with the adoption of AI technology. So verifiability is
Yeah.
one part of things. Value accrual, which I earlier talked about, like the creators actually getting back the value, is something which is another angle. And if you check, there are like n number of court cases which are happening on OpenAI and every other LLM creator in terms of IP disputes. For example, like right now also Ghibli has not earned anything from the Ghibli thing. So
Hmm.
we are just waiting for Miyazaki to actually file a case.
Yeah.
But this is how we would generally look at things. Like what we are solving right now is might not have a lot of demand right now, but it will have a lot of demand down the line because there are other things
Yes.
also happening in tandem. And this also creates a lot of bubbles. For example, in Web 2 also we saw the same thing. Web 2, everyone understood what internet is, everyone thought that it's going to change the world, and then everyone started building. But the actual
Yeah.
demand, so this all happened in 1990s, and people created
Hmm.
amazing things. Winamp was created. People used to listen music. Was not scalable because there were IP rights and creator royalties. So Spotify had to come in. We had Hotmail,
Napster was
MSN.
there.
Yeah.
Hmm.
So those things never scaled because the demand was not there. And why the demand was not there? Because people are always concerned about ownership, property rights, and the payment they get in. So when people were
Hmm.
listening to music on Winamp, no one was earning. The person who created the song was not earning. So someone had to create that model. Spotify came and created that. But in between, there was something called a dot-com bubble, where the
Hmm.
first institutions which created the technology uh, went bankrupt, and the new institutions which created use case on top of that technology, they emerged, like Facebook, Spotify, um, Amazon miraculously survived, but new e-commerce also came in after 2000, right? So similar cycle we will
Hmm.
also be observing in Web3. Right now, I agree that we might be on a bubble, right? And we might have been overvalued at a lot of times, and a lot of models which we have created might not be working 5 years down the line. But the technology infra which we are creating, they will remain the same. For example, Oracle, Dell, right? Microsoft. So these were the people who created the base layer of technology. They still survived and thrived, and new models are going to come in. In fact, we had this discussion at a very good time because now I'll be uh, moving on to the new models which are being built. So I'll just share my screen again.
Yeah. And like
Uh,
we'll pace up a little bit because,
yeah,
or
I
we'll just have a
have
part
this
two
on
as
the
well.
slide.
Okay.
So I just switched and oh, my favorite. Uh, am I audible?
Yeah, yeah,
Your
you're audible.
voice,
Yes.
but your voice is coming very
Huh.
muffled and very low.
Okay. Okay. Now is it better now?
नहीं, same
No, no,
issue.
no. We're not able to hear you very well.
One second. I'll just fix this. Is it any better now?
You're still not audible.
Still not audible. Okay. Should be better now.
I think it's bit better, I guess. Yeah, yeah. Hello?
So moving indoors is helping. Cool.
Uh-huh.
Okay. So I'll keep talking while I'm shifting. So coming to a very big issue called fake news, right? And this is something which we have seen everywhere. Uh, it's not just about the social media. Even in traditional media, we see a lot of fake news happening, right? So 2000 के नोट में chip है, and all of that happened. There was no accountability, and similarly, like we had a lot of other problems because news, as such, is something which is a common consensus, right? And without having a consensus mechanism, we cannot establish anything as true or false. So this is another thing which Web3 has been trying to solve, and how we are trying to solve it is through a market mechanism. So this creates a new model for arbiters of truth, the truth keepers. So traditionally speaking, the truth keepers are institutions which are run by people whom we are supposed to trust. Right. Also, has a am I better audible now?
Yes, 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 you're audible.
Yes.
Awesome, awesome, cool. So, how do news channels make money? They make money by viewership. To increase viewership, they have a constant pressure to create sensational content, to create more engagement. And truth is not as sensational, right? It's a bit boring. So, this is why generally we see a lot of fake news happening. So, how this is being solved by Web3 is there is something called a prediction market which has been created where in fact I'll just show the prediction market to you guys. Have you guys looked at poly market yet?
Yes, yes.
I have.
Awesome.
Like, I've followed it as well.
Amazing, amazing. I think that's brilliant. I'll just share it once so that people can quickly check out how it's happening. So now there's a market for next prime minister of Canada. Okay, so people are voting on it. So you can buy a yes for 67 cents, and if this actually happens then you will get $1 back, and if it doesn't happen you will get $0 back, so you lose your money, right? So this is a model where we are asking users to put their money where their mouth is. So I don't want anyone to say like in the next election Trudeau will lose. I would want to say in the next election Trudeau will lose or I will pay you $100, right? So then people become much more serious because there's an economic incentive attached.
And
Unless there's an yeah.
the most interesting part is that this model predicts almost at 100% accuracy at this point. It's like
True, true.
too good.
It's too good, yeah. Like in the US election with 100% accuracy they predicted who is going to win which state. And most probably this was so Musk had something where he announced, where he looked at the data and announced that we had won 4 hours before the actual election results were out by the media, right? So it was this thing. So he looked at the truth markets and he looked at the truth markets and established that uh, there's an economic matka which has been made for Trump to win, which is very big, and it has been made by the bets so that people have been actually, because no one wants to lose money, right? So people actually believe that Trump will win, and he saw this on Polymarket and announced it earlier than the media announced. Similarly, if you'll just look at the markets, it could be anything: politics, sports, crypto, tech. So we have markets for everything. And most of these markets will give you data better than the news sources and faster than the news sources.
You can also use the economy markets to hedge your trading strategies. That's what we were doing with Fed rates. So we use the a prediction market for Fed rates to hedge our trading strategy. It's a good hedge.
Absolutely. Like what you can do is like if the Fed rates are being cut, then you can bet on the assets which will rise because the rates are being cut, and you can also open the rates not being cut a bet on poly market. So either ways, you have a hedge against that.
So basically, like wherever you're working and wherever something, some global event might affect you, you could have a say in probably predicting what that global event is going to be. And when multiple people have that say, we might reach to an accurate outcome even before that event happens. It's just quite crazy out there.
True,
So yeah.
true, true. And misinformation becomes very expensive. For example, let's say
Hmm.
the poly market on Trump winning is 60%, and I want other people to believe that Trump is not winning, then I will have to put in a good amount of money on the bet no for that 60% to come down. So, and that pool is, let's say, $1 billion, which was actually $1 billion. So to actually bring it down from 60% to 30%, you will have to invest $500 million. and it will come down to 30%, but when it gets resolved, you will lose your $500 million, right? So misinformation becomes very costly in a prediction market, and this is why we
And
trust prediction markets.
uh, and if we have probably a similar model of creating the cost of corruption of something so high that's not true. For example, we were talking about the receipts case. If we keep the cost of corruption too high, no one would actually try to even use a fake receipt generated by AI. So this is generally a very powerful way to actually stop misinformation or increase verifiability of anything.
Absolutely, absolutely. And I think prediction markets are here to stay. It is something like people have been working on since 2017, 18, but finally blew up with polymarket on US election. And now we have like a lot of betting markets. Like, and this is
Yeah.
not something which is completely new. Sports betting always used to exist, right?
Hmm. Yes.
We are just doing it in a
And
more transparent way.
prediction markets evolving to become information markets even is a even better angle to it. Adds in more depth.
Exactly, exactly. So prediction markets are where you predict on something to happen. Information markets is where you are predicting on. So you are basically weeding out misinformation and correct information is being established. And a step further on this is decision markets, where you are actually betting on. Okay, so if I have to take a decision, it has more to do with the information I have and less to do with how I think. If I have all the information, then making a decision is very easy, right? So once information markets have cleared out most of the misinformation, then taking a decision becomes much easy. So we can also have a market for decisions itself, where people will be given access to very clear information, and they can decide basis that information what they want to do. Every decision will be measured in market terms. For example, if I have clear market rate of bananas, right? If I have clear transportation rate of bananas, and if I have clear demand data of banana, I can always take a call whether to increase the production of banana or decrease the production of banana, right? So I can always create a market. Increased production of banana will cause me more profits. Decreased good production of banana will cause me more profits. And people will bet on yes or no here. And basis the decision which wins, that decision will be carried out. And when the decision is carried out, the people who have contributed in the right way, where in this case is people who have said that increasing the production of banana will lead to more profit, and then that decision wins, and then we increase the production of banana and it results in more profit. Then that entire bet where the people had been betting on no, the people who bet on no, their money will be given to people who had bet on yes. But if yes has won and the increase in production of banana has not resulted in increase in profit of banana, then the people who had voted yes, their money will be taken out and given back to the people who had voted no. So this creates a scenario where your decisions are directly attributable to you being right or wrong, and you have certain assets which can grow or slash basis how accurate you were. So this is a much easier way of decision making, especially when you talk about large scale consensus to be necessary. So banana might be a very small example, but if you are, let's say, allocating a state budget, right, and you want to increase or decrease allocation in education, right now what happens is a cabinet takes that decision, and the citizens have no say in that, because you cannot have a voting for everything, right? But where people can actually contribute and earn from it, they have more incentives to participate, because when you vote, you don't directly earn from it, but when you participate in decision markets, you will earn from it. And now if we look at certain demographic characteristics, for example, like generally how many people vote, around 50% of the total population, maybe 70% have voter rights, and then 50% people vote, right? But if you look at internet access, it's much better, We have like around 80% who have internet access. We have around 85% literacy rate. So essentially, if people are not showing up for elections, it is because they don't have enough incentives. It's not because they don't want to participate. It's because if they participate, they don't gain anything. If they don't participate, they don't lose anything. And that gets fixed by decision market. And what it enables is it enables a large scale consensus to very relevant decisions. And this is an improvement as compared to our current democracy, current republic model, right, where the actual large scale consensus happens every 5 years, and there's a committee which is selected which takes all the decisions. We would rather want more participation directly in those decisions, and we would want to win or lose from those participations if we are adding value or removing value as such.
Like, if you look at a very bullish example as well, every taxpayer should be involved in the decision making process of where that tax money is being used. This could be a very good way to actually fund projects on taxpayers' money, and this could be a motivation for taxpayers to actually pay their taxes and not hide from paying those
Absolutely.
taxes.
Absolutely.
Yeah.
Because paying those taxes gives you access to a system where you can participate and earn more.
And in fact, those services which will be built, like highways being built, you could actually have a say in that decision making process, and on the basis of that, funds being allocated in projects that you feel are more beneficial to you. So in general, it makes the system more transparent, and this is a very bullish example, but this is possible through this technology. So yeah.
Yeah, absolutely. I think in next 10 to 20 years, when people actually see the power of prediction markets and decision markets, they would want more and more decisions to be carried out in this format rather than the centralized voting format. And the main thing is that you are able to extract value from being right. Because if you are, let's say, in current elections, you
Yes.
vote anyone, you don't. So basically, people who have voted for the ruling party or voted for opposition party, they are the same people right now. You get the same benefits. But in the decision markets, if you are contributing to a wrong decision, then you lose money, and if you are contributing to a right decision, then you make money. And these economic incentives is something which will enable more participation, because democracy as such has a participation problem, and it can be only fixed by fixing the incentives.
Doesn't this like promote like only rich people can have a decision making power?
So actually, it can happen in that way. So essentially, what will happen is only people who are taking decisions which are, like whose outcome is more favorable. So, for example, like if I am allocating more budget to education, and the outcome which I had decided was it will result in more board toppers above 90%, right? So people who voted yes, that's one step. Then the board exams will happen, and does it increase the number of board toppers above 90%? They will earn. But if you vote yes and it doesn't increase, then you will not earn. But even a small person or a big person, they both have same ratio of incentives. But generally, what happens is it becomes centralized. But your money is not going to harass small people. Why? Because if you are trying to sway the decision in a way where you get the decision passed because you have more money, then more money is at stake as well. And if the decision is passed and it doesn't result in a favorable outcome, your money will get slashed, right? So while people will have more money, but they will have more money, or big people will keep on being big people if they are always voting in the right direction. If they have started taking bets in wrong direction and trying to manipulate the market, then there will always be people who will bet on the opposite side and extract value back from these people, if that makes sense.
Can we create a governance model in which rather than betting on with money, we bet on with our decision making power? Say currently I have a decision making power that is equivalent to you, but say I make wrong decisions, all my like all the bets I make are wrong. So I don't have a good decision making power. So your vote will count more than my vote because you may have a better decision. So would this work?
Okay, so better decision. What I understand is when my decision actually leads to the desirable outcome. Is that correct?
Yes, that's what I mean.
Yeah. So as long as my decision is in the direction of desirable outcome, I am making more money. But if my decision starts being in the direction where it's not resulting in the desirable outcome, then my decisions will start losing money. So when you say that instead of money, we can vote with governance power, so these governance power is allocated in governance tokens, and these governance tokens also have a market price. So essentially, every token becomes money itself. Because even if you look at the definition of money, money essentially means coin, where you attribute a value to anything which you call a coin. So a token is money. Your coin which you hold in your hand, that is money. Your share of governance power in a protocol, that is money. In fact, your shares, so when you are holding shares in a company, right, that is also money. So similarly, while we can transfer it to governance token itself, and most places are doing that, but it's impossible to take out money from the picture because the financial incentives are the things which are actually creating a scenario in which everyone has a motivation to uh, vote in the correct direction rather than trying to like create misinformation or manipulate the market. Because essentially everything is money, just that we don't call it money. Like your glass bottle is money as well. You just need to have a person who can buy it. But because it's not backed by RBI, we don't call it money. But if you look at crypto, every currency is money. And this is something which we had observed earlier also. So in the late 1900s, I think US had no standard currency, so every bank had their own currency. I think there were around 15, 16, 1600 different currencies before Fed was actually made in 1900s, 1910 something, 1917 if I'm not wrong. Before Fed in 1917, the the currency was not something which was standardized. So this is the stage where we are in crypto also right now, but it gets more standardized later down the line. But the governance rights which we'll be using will still be money itself. Does that answer the question?
Sure, sure, yeah, it does.
Awesome. So let me. I think this we covered polymarket. Oh, coming to future of work. So the most important problem, I think, in the nature of work is so while everyone would want to have a part in gig economy or freelancing, the platforms which facilitate the matching of supply and demand, they charge up to 20-30% of the cuts. They control your data, and you cannot take your reputation from one platform to another, right? So let's say if you have a great profile at Upwork, you will still need to start from zero at Fiverr, right? There is no common reputation system. But how things are working in Web3 is there are four tracks in how future of work is shaping up. One is bounty, where open tasks with crypto rewards are there, and these tasks are monitored by smart contracts. So, for example, like you could complete something, and the best entry wins. The best entry gets decided by community vote, which is again completely open, right? So, this is how we can float tasks. So, we do this generally in a lot of crypto projects, and Super Team is a great example if you have to see how bounties work. Similarly, we have DAOs. So what happens in DAOs is we come together and we decide that okay, so this is a problem which we need to solve, and we are able to pay anyone $50,000 to solve this problem who has certain background. So then people submit their proposals, and then we vote on those proposals. We decide some milestones, and the proposals are passed. And when people achieve those milestones obviously are something which is public. So for example, like my milestone is having $1 million in TVL, and when I actually and my $1 million in TVL can be measured by just looking into the smart contract where my project's TVL is there, and as soon as it crosses $1 million, we are able to transfer the payment for milestone one. So it becomes much more transparent and much more trusty thing. For example, if you look at traditionally, uh, you might have completed a task, but the person who has given you the project will be like, no, 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 I think the payment is too much, I will give you less, or no, 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 give me 1 week more, I will transfer the payments. So these kind of inefficiency will not be there. The 20-30% cuts which are taken, that will also not be there, right? And all the proposals, because they are in public forum, they will get the best amount of scrutiny as well. So this is something which DAOs can power. Similarly, another thing which we take a lot of pride is hackathons. A lot of good projects come out of hackathons. So these are time-bounded innovation competitions, just like how Web2 also had. So whenever a new technology is created, whenever a new, let's say, a blockchain is created, right, we would want a lot of solutions to come on top of that. So what we can do is we can create hackathon tracks on that, and then leading developer teams, they come in, they participate, the best projects win, and from there their career gets launched, right? So a lot of hackathon projects have converted into $1 billion projects right now over the last 4 years. And another very interesting thing is crowdfunding, borderline illegal, but it's happening. So let's talk about it. So ICOs are initial coin offerings. So what you can do is you can first create your tokens, right? So Ethereum has created, let's say what happened in 2016. Ethereum wrote its white paper, created a team, published all of it, and said we will be releasing 1 billion tokens, and you can buy it. People started buying it, and that's how Ethereum raised money. It's an IPO. It's very similar to how an IPO works, but an IPO generally happens after your company is profitable and you are at a certain scale, and then is guided by bounded by exchanges. But in this case, you can create your IPO even before you form the company. This is generally how a lot of projects raised funds between 2016 to 2020. And now also they are doing the same thing, but through a launchpad model, or so for there
Or
are a couple
through a
of
meme
launchpads
coin.
through a meme coin as well. Yeah. So
Yeah.
there are certain regulations which you have to take care of, but you can always have a very fast model of crowdfunding where you can access capital globally without uh, the help of traditional VCs, banks, or exchanges, right? Similarly, there are platforms like eco.xyz where people could form in groups and start supporting the projects they like. How they support is by buying the tokens, and when you buy the tokens, there are projects who are having a team supply of tokens. They are selling the tokens and they are able to raise money to keep working on their idea. So this has no gatekeepers. Anyone from anywhere sitting in a remote town can do an IPO, raise enough money, keep on delivering value, and keep on having more and more rounds of ICO. So public alpha, private beta, we can call it a number of names. uh, Cool. Coming to DAOs, I think DAOs we have almost understood. So every person who has a token for the project becomes a member of the project and is allowed to vote on the proposals. So basically, the community is formed through the ownership of the token, and they are able to do on-chain voting for major decisions. These could be ranging from where do they want to spend money on. These could be ranging on changing the structure of the blockchain altogether, right? Controlling the inflation or anything. So you can vote on anything and change that, just like how our constitution works, right? If we want, mm, like, let's say, if we want to change the name of India, right? How do we do that? Parliament votes and they decide and they can do. But the problem we are facing is that the parliament votes, which is 545 people, right, in the Lok Sabha. How about everyone votes like a referendum? So that's how DAOs are working. And if the voting also results in some movement of funds, then they are done through treasury management. There are people who are holding the treasury. So basically, let's say 10 people control the treasury, 6 people sign, and then the funds move. And it's as simple as that. The movement of funds is also transparent. If anyone misbehaves, we can have that people removed from the treasury management. How? Through another voting. Is that simple? Simple enough?
Yes. Yeah.
Awesome. So this is the last thing of the day. I think, yeah. Futarchy we just covered. Decision markets is basically futarchy. So if we introduce decision markets instead of voting in the DAOs, then we have something called futarchy. The core principle is vote on values, bet on beliefs. And as you can see from the example, so there are two markets. One is where we implement and this change will happen. Other is we don't implement and this change will happen. Depending on whichever win, we implement that, and depending if the outcome has happened or not, we reward or slash the contributors. It's as simple as that. So this creates a better incentive for the voters to remain honest.
So it's like decision markets come into DAOs for making decision making, like to involve more and more people in the process.
Yeah,
So
exactly. So we don't have
basically,
this. The complaint of voter participation is something which we have
yeah.
seen since the last 50 years, right? Like,
Yeah.
because
And
voters don't
even
participate.
we have seen that in crypto as well, right? Major DAOs have this complaint that the voters are not participating, and then we have one voter who is actually making all the decisions.
Exactly,
So
exactly. So
yeah.
maybe 5% of the total token holders only they vote, and out
Mm.
of that a majority will happen only if 2.5% of people have agreed, right? So this is something which is not very good for creating mass scale consensus through voting. So this can be solved through a decision market. And why people will vote is because by voting in the right direction they have a chance to earn. And what is the fundamental truth of the current society is, unless there are economic incentives, people won't do shit. So no one will do anything for the good of it. This is what we have assumed as an underlying truth. Digital assets and IP, I think we have also covered a part of it in the earlier discussions,
Yeah. Oh,
where like IP rights are enforceable. Like IP rights are as good as they are enforceable, right? But with because with the lack of arbitration, which is courts, you cannot go to court for every small dispute you have, right? So most of our IP rights should live on chain and should be governed by smart contracts rather than through patent offices, which are very slow. I am sure, like, if any of you have applied for a patent, uh, you must have waited for like 1 or 2 years for the patent to be granted and to be enforceable. So this is something which Web3 accelerates at a great speed. So we call IPs. So IPs get represented by NFTs. NFTs are basically non-fungible token, which is basically a one-of-a-kind asset. Which is every patent is a one-of-a-kind asset. So rather than calling it a patent, we are just calling it NFTs, which have a verifiable ownership and provenance, and the royalties are governed by smart contract. For example, if I create an image, that image is used by an LLM to train its model, and then an output image is generated basis my image, then I should be able to earn money from that output being sold for whatever money it's sold for, and my contribution percentage in that output being generated, I should be able to get that money back to me. How that can happen is by clear attribution of work and clear attribution of who holds the IP for what. So this is the direction in which NFTs are moving, and there is a lot of fluff around it with digital art and all of that, which creates a lot of scammy vibes. But that's not certainly our end goal, and that's an initial problem which we are having right now. But yeah, and when we are talking about IPs, we should definitely talk about gaming, because in gaming you spend a lot, but you don't get ownership to anything. Your things are not transferable, your reputation are not transferable. When that happens, it unlocks a lot of values for gamers. That's one side of gaming. So one side of gaming where Web3 is contributing to is in IP rights. The second side
yeah.
of gaming where
So
Web3, yeah, please go ahead.
for now, it's majorly IP rights, but then this angle where your reputation as well gets transferred. That is very interesting, actually. And that's where I guess the major innovation in gaming will happen with Web3.
Exactly. I
The
think even
reputation
I
being
think the
transferred.
same. Even same thoughts. Like reputation is definitely a very big area where Web3 is working at. Another very interesting aspect is verifiability. So in gaming, the biggest problem, if anyone has done competitive gaming, it is what we call hackers, right? So this guy, is it following the rules of the game or is it not? And to actually ensure that, we will need a centralized version in which tournaments are happening, where people are always monitoring things to ensure that people are not cheating, right? But if we implement verifiability at machine level itself, where we are not directly using your data, we are not seeing everything, but we are verifying it in your machine itself, and we are issuing a proof of verifiability, a zero knowledge proof. This helps a lot of expansion in the tournament structure, right? So this is another angle where Web3 is actually contributing to gaming. One is IP management, second is reputation management, and third is verifiability of um, um, it's sort of reputation, but verifiability is more about creating those secure environments in which competitive gaming can happen, which is right now depending on centralized event managers to say. I think, yeah, like this is majorly which I had for today's call, and whoa, I am surprised to see so many people are still here. I thought people would be dropping off.
Like a lot of people did drop off. So attention span to come हुआ है.
Yeah, like I, yeah, Aditya, you raised your hand. Yeah.
Am I audible?
Yes, there's some noise, but I think I can understand.
Okay. So, yeah, after discussing all this, it would be so dumb to ask this question, but I had just one question: that are decentralized platforms and blockchains really decentralized? And the reason why I'm asking this question is, first, we know that even today, 1.1 million or something bitcoins reside in a single hands, right? And the second point is, to mine all these bitcoins and all other crypto, we need